ونتحدث عن افتتاحية هذه الجلسة مع ضيفنا سنديب شرما ورئيس قسم الاستثمار في سانتاكس كابيتال.
It's a pleasure having you. Let's first speak about the numbers today and the GDP. How can we read today the growth in the US that it's higher than expected or even higher than last period, despite the continuation of the interest rate hikes and the inflationary pressures that the Fed is trying to warn within markets?
Always a pleasure to be on your show, and thank you for having me. Your observation is correct. I think the GDP number is quite good. However, I think there are a lot of one-off items in that GDP number. And economic data in general, I think, has a lot of variability and volatility to it. So I'm not sure that we want to draw a lot of information from one data point or even a couple of data points in a row. I think we need a little bit longer-term perspective. My estimation is that the economy is not as strong as it is being projected. I think there's a lot of weakness. And you very correctly pointed out, despite the Fed raising interest rates, they've not been able to bring the economic growth down, which tells you that they're failing, and maybe raising rates is not necessarily the direct way to attack the issue of inflation. Some of that is, after all, attributable to fiscal policy. It has nothing to do with monetary policy. So I think there's a lot of conflicting series of data, and it is not so easy to draw a conclusion from only one data point.
We have so many data that we are going to speak about later, but it's really surprising. With Wall Street opening today, we have seen pressures on the tech stocks, especially Meta, despite the positive results that led them to the levels of 2021. But the stocks didn't react with these results. What do you think that maybe Nasdaq will get into the correctional area?
It is entirely possible. As you know, NASDAQ or the Big Seven are predominantly keeping most of the market indices up. Without them, I think the broad market indices would be much lower. If you look at the equally weighted S&P 500 index, which diminishes the impact of the top 7 companies, that index is down year to date and down going back to 1 year when supposedly a new leg of the bull market started just about a year ago. And most of the indices are similarly either down for the year or they're down, or they've given back all the returns they had coming out of a bull market, somewhere towards the end of October last year. So it will not be surprising to see some weakness in the NASDAQ. And it is also not surprising that the market is punishing some of these mega cap technology sectors quite a bit, despite, I would say, decent earnings. Not great earnings, the earnings are decent. There are some issues relative to Google, particular to Google, and there's obviously some issues in the earnings for Meta. Despite good numbers, they're talking about some changes to their capex. They obviously have some issues with the AI side of the business that they're developing. So I think there's a lot of concerns about Meta and Google in general, but it would not be surprising to see the NASDAQ come down. The QQQ is still up around 31% for the year, whereas the equally weighted S&P 500 index is actually down for the year through yesterday.
Please stay with us, Mr. Sandeep. We are going to a short break and we will come back to you.
Sure.
بالنسبة للأسواق الأمريكية. واهلا بكم من من جديد مشاهدينا نعود
Back to you, Mr. Sandeep. We were speaking before the break about the economic data. Let's start from the unemployment that is higher than expected and higher than the recorded numbers before. Today, spending and especially for the consumer spending, how do you think that it's giving us that the inflationary environment is still continuing? And this is what the Fed warned about.
Well, a couple of things. Let's go back to your first question about employment data. We find that, again, the data series is not very reliable in our estimation because there is a growing gap between the establishment data and the reported data. And over a period of time, they do tend to, catch up to each other. So I think we may have some kind of a lag to that information. So I would not go very much by the employment data right now as a way of economic strength. And secondly, I also think that under the umbrella of rising inflation, many companies, as you well know as a consumer, they have increased their costs quite a bit. Many of the software companies have increased the cost by as much as 20%. And so as those prices go up, they're going to continue to cause inflation to stay a little bit higher. And some of that is an impact that is being caused by companies that have not raised prices in decades have now raised prices quite a bit. And consumers really have no choice but to go along with that. So I think the inflationary data is going to temper, but it's going to take a little bit of time. And more than the Fed and more than any other economic data, we would be very closely watching the yield on the US 10-year Treasury bond to gauge what's going on and whether or not inflation expectations are getting embedded, not in the near term, but more in the long term. So even as the Fed stops raising rates or takes a long pause, I think cumulatively inflation data is built in, and it's going to take quite some time for the cumulative inflation to come down, not the month over month and year over year inflation data.
We have seen today movements on the bond yields, especially after the data. In your opinion, how this will continue and it will impact the bond market?
That is a very important question. I think, we had a pretty good rally going on in the market till the end of July, and much of it has been unwound primarily because rising US 10-year Treasury yields. And so that, as I mentioned earlier, is a very important data point to be watching. However, I think some of that rise or spike in yields is also related to many sovereign, central banks selling US Treasuries. And I think that risk, that selling is abated a little bit. Also, I think as the risks in the geopolitical segment of the world are rising, there is a possibility of a flight to quality or flight to safety. And in that kind of environment, we could see the US 10-year Treasury yields come down quite a bit. I think over the next year or so, we would see the US 10-year Treasury yield maybe down as much as 100 basis points from where we are right now. But in the near term, that remains a very considerable concern for the global macro picture and the valuation of equities in general.
نشكرك سيد سنديب شرما وأنت الرئيس.
Thank you very much, Mr. Sharma, for being with us today. It was a pleasure having you.
Always a pleasure. Thank you so much.
Thank you, sir.
Sure.